So welcome back, Takwa FX here. Today let's talk about how you can take your small account to a bigger account. Let's say like $10, but it all falls back to the kind of pair you are choosing to trade. You want to grow your small capital. So this very setup, which I'm going to show it to you guys, you have to go step by step, go through it step by step. Start with a small capital and see how you can build it up to a bigger capital. So you have to start step by step. So on this very channel, I will drop a lot of tutorial videos on how you can build your small capital. So you just have to pick one and stick to it. You don't have to use two things, because this one may be on a drawdown. If you are using two different strategies, you may be missing up, as in you won't know the one that will work best for you. So stick to one thing and make it your own. Follow your rule, follow your trading plan step by step. And so if you want to join us on how we trade on Aqua FX, you can contact me through the link which I'll drop on the description of this video. Because on this channel we drop a lot of strategies, but that doesn't mean we are using all the strategies on this channel to enter a trade. We have our own proven strategies which we use in this market. Let's go straight to the charts. Let me show you how you can definitely do this on your own. So this is USDT, and I'm going to be making use of 5 minutes. I'm going to be making use of 5 minutes. I'm not going to be using any indicator when it comes to this. I'm going to be using pure price action. I'm going to use pure price action for this tutorial video. So for you to build your small account, you have to allow something to happen. You can see this is my 5 minutes chart. You can see this move to the downside. You just look for those retracement. This is USDT, and this is very okay if you are using a volatile pair. You can actually do this if you are using a volatile pair. So you can see that this market was in a downtrend. I'm using 5 minutes right here. The market was on a downtrend. So as that market keeps pulling down, you are going to be marking the structure. Since the market is on a downtrend, you are looking for that reversal. So you mark the structure. So what happened? This market comes back and close above this structure, the high. So as this market comes and close above the high, this signal you that this market is no longer bearish, that it has turned bullish now. So therefore you are looking for to take a buy trade, but you will not just take a buy trade blindly, and you will not just take a buy trade at the close of this candle above, because if you do, where your stop loss is going to be will be very it will be very your stop loss will not going to give you that RR that you needed. It's not going to give you that profit that you needed. If you place your trade right there, your stop loss will come below this low, and even if you are targeting this very high here, you see that you are going to make just 1:2 RR, and if you are targeting this very high, you are going to make 1:1 RR. That is to say, if you are risking $3, you are going to make $3, or you are going to make $5 or $4 from this tutorial. But this is not how you will go for you to grow a small account. So as that market closed, as the market closed above that zone, you have to mark the zone that engineered the movement, which is this very zone. There was the zone that engineered the movement. This is where everything starts from. So I have to mark this zone. I have to shade that zone. And I'm going to be waiting for this market to come back to this zone here. So especially the wick, I'll shade this wick. I'll drag it to this side. So once the market comes to the wick, I'm going to take a buy trade. I'm not just going to take a buy trade. I'm going to scale down to another smaller time frame. It's maybe my 1 minute or it may be my 3 minutes for me to take a trade. So I was expecting this market to come into this very was expecting the market to come into this place and give me an entry confirmation with a candle for me to take this trade to the upside. But what happened? This market didn't come into this zone. As you can see a nice imbalance right here. See fat candle, see fat candle. These candles are so beautiful that we wait for this market to come into this zone, but yet it doesn't come in. So this is to show you that imbalance doesn't feel as quick as possible, but in future the market must come back to fill this imbalance. But right now the market hasn't returned to fill the imbalance, so we keep watching for a zone. Then we've seen another set of consolidations here. This consolidations was much too. So as this market broke out of this consolidation, which happens right here, as the market broke out of that very zone, we've seen where the point that the move started from. The move started from here. So we mark out the wicks of those candles and we expect the market to come into the wicks. Wicks don't lie for us to take a trade. And what happened? This market came into the wick right there. So as this market come into this wick, what you should do is for you to move down to another small time frame. It can be your 1 minute or 3 minutes to look for a candle confirmation for you to take this trade back to the upside. So let us go to a smaller time frame. So now let's move to like our 3 minutes or 1 minute. Let's go to 1 minute. So here I'm on my 1 minute. So here is my 1 minute. You can see that this market has come into that very zone that we marked. Here is the zone, and the market has come into that zone. And as that market come into this zone, it closes bullish. It closes bullish with this very huge candle. And then as this market closes bullish, it is for you to enter a trade. How will you enter a trade? Not at the close of this candle. Check the base. If there is any inside candle, which happens to be this one, you can place your trade. If not, you place your trade at the close of that candle. But since this zone has inside candle, which happens to be inside bar, we will place our trade at this candle for us to buy our market back to the upside. So as this market prints this inside candle here, as the market prints that inside candle, you pick your buy tool, you place your trade right there, which is your buy tool. You target anywhere you can target. Let me say any level that you can target above. That is to say, you have to go back to your 5 minutes and look for a level you can target. And we see one level here. That first zone is where you are going to target, and only that first zone here gives you 1:19 RR. If you want to target the second one, that will gives you how many RR? That will give you 1:25 RR. But since there was an imbalance right here, I would like to target this first level because the imbalance inside here, which is right here, this imbalance here shows that if this market come back, it may stop at this point and reverse. Since that from this very zone till this zone has already given you something like 1:20 or 1:19 RR, you can just take the trade and you leave the market because this is a small account and this is a small time frame. It's a smaller time frame. So that will give you 1:19 RR just for you to buy this market. So that is that for the buy scenario. So let us go back to our M5 and check if we can see our sell setup. Still using what? US30 and still using what? 5 minutes and still using what? Our 1 minute to look for an entry. So now we are going to check for a sell scenario if it is possible for us to have a sell scenario. So right here, we've seen that this market was bullish for a very long time. It was bullish to the upside. So therefore, you are looking for that retracement for you to take this market down. So we've seen a zone here. because this zone was the last zone that broke this structure, this very structure, to the upside. That very zone took away structure to the upside, and at its return, this very zone right here also take down that zone, takes out this low to the downside. So that zone lead to a bleach of this low to the downside right here. So therefore, that very zone now becomes something that we are interested on. This zone here becomes what we're interested on. So we mark out this zone. Don't forget, wicks don't lie. So we mark the wicks. We mark the M5. This happens to be our M5. We mark the width of that M5. That was the width of the M5, and we have to move down to our small time frame, which happens to be our 1 minute, and we wait for this market to come into it. As we can see, this market was able to come into it as it is. As it's come into it this way, you move down to a smaller time frame and look for an opposite candle for you to take this trade back to the downside. So let's go to our 1 minute chart together. Don't forget, if you are new to this channel, do well to subscribe. If you're already a subscriber, thank you in a bunch. Thank you for watching. And if you want to join our VIP or our signal channel or our mentorship group, do not hesitate to contact me through the link which I'll drop on the description of this video. If you also want to talk to me one-on-one, also use the link on the description of this video so you can check us out. So now this is my 1 minute chart. The market was able to come into this 1 minute chart. As it come into this 1 minute chart, it gave us this nice candle here, engulfing. Then as it gives you this engulfing, look at this base. There is a candle here. Look at the base. There is a candle. So therefore, we place our trade at this candle right there, and our stop loss has to go below this zone that we mark on our M5. So therefore, we set our sell limit at this point. We set our sell limit at that point. Then our stop loss come below that zone which we mark on our 5 minutes. Then we go to our M5 and look for where we're supposed to target. But our first target will be at this point. That is 1:9. But if you go to your 5 minutes chart, you must surely see where to target next. So that is 1:9, your first target. Then if you go to M5, you possibly look for a place for you to target below. So that is that for this tutorial. The first TP is 1:9, which is not very small, and it is very good when it comes to a small account. So this is how you can build your small account just using this simple and effective strategy. So thank you for watching, and do not forget to subscribe to this channel. Don't forget to subscribe to the channel. If you haven't subscribed, do that before you forget. So I remain Aqua FX as I sign out. Peace.